Hi everybody, welcome to my channel. Here it's all about learning and understanding stocks and options and how to make them a great source of building wealth for you. This is the first episode in the series on options trading. Most people are aware of trading in stocks, where one buys a stock of a company at a low price and holds it for a period of time, say weeks, months or years, and later sells it at a higher price to make some gains. Well, it's a perfect and a sensible way of creating wealth over a period of time in the stock market. But most people are unaware of options trading. They are another instrument in the stock market that have a great potential to generate wealth for you. They are pretty versatile and active form of investment. Similar to stocks, options trading too have buy low, sell high and sell high, buy low strategies. So without further ado, let's go to the charts and learn a bit more about options trading. In order to understand options, let's try to understand and see what are their disadvantages and advantages. Alright, there's only one and only disadvantage in trading in options, that is the risk it has. Okay, it is very risky to trade in options. Now why is that? If you do not have a sound knowledge of the stock market, it's going to be very risky trading in the options market for you. Alright, if you do not understand charting, that is candlestick patterns, price action, technical indicators, etc. If you do not know how to use them, how to analyze them, how to understand them, it's going to be very risky. Alright. Trading in options requires a hands-on approach. Now what do I mean by that? You need to have a clear plan. You need to have your targets and you need to know what a stop loss is. Alright. And you need to be hooked onto your screen, knowing the highs and the lows of the stock market or the options market. And if you are not into it, if you're not up to it, then it's going to be very risky. Alright. Above all, you're going to lose your capital. So it is very risky to trade in options market because of these reasons. Alright. Now on the other side, you have advantages. And the one and only advantage is that it is very rewarding. Okay. Provided you understand how to trade properly, efficiently in the options market. So firstly, the ROI, okay, is better than investing in shares. The return on investments when you're trading in options is better than investing in shares. In later episode, we will see with an example. Secondly, the capital required trading in options is less as compared to investing in shares. Thirdly, in options, you can trade in any type of market, be it bull, bear, or consolidation phase. Alright. So remember, the one and only disadvantage is that it is very risky for these reasons, and the advantage is that it is very rewarding for these reasons. Alright, let's go further. Now what happens in the options market? You have contracts and transactions running into millions. Okay, there is tons of buying and selling going on. You have entities called option sellers, and then you have entities called option buyers on the other side. Okay, and what are they doing? What are option sellers doing? They are selling options called as call and put, and on the other side you have buyers who are buying from the sellers the respective calls and puts. So remember that in the options market you have buying of call options and selling of options going on. Alright, this episode is only to know briefly, just to get an idea about the options market. In later episodes, we'll go into each topic like option sellers and option buying and what are the dynamics related to these two entities. Alright. Now you should know this thing. This is the basic principle. If there is a bullish market, if the market is making a higher high and is making a higher low, so the basic principle here for investment is that you buy low and you sell high. Remember this, by heart this. In a bull market, when the sentiment is good, it's going upwards, there is an upside trend, you buy low and you sell high. And on the other side, if there is a bearish sentiment, the market is going downwards, the wave is making lower highs and lower lows, the investment principle is that you sell high and you buy low. Okay, remember this thing. Alright, in a bull market, you buy low, you sell high, and a bearish market, you sell high and buy low. Alright, okay. Now, these are the common terms in the options market you will come across. We will see and discuss all these points individually in later episodes, but here is just to make you familiar. Alright, you have something called call and put options, there's something called option chain, strike price, there's some premium involved, there's something called time decay, there is an expiration date of options, and there's something called in the money, there's something called at the money, and there's something called out of the money. Alright? Okay, I hope you like this episode. Hit the like button, subscribe if you haven't already, and as usual, have a great day. See you next time. Bye bye.